What's going on, everybody? Welcome back to the podcast. Obviously, a few things have changed since the last time we hosted an episode. We changed the name of the podcast from Trajecta University to That Makes Zero Sense. So, just a minor shift. And with that change in the naming, we're also going to change a little bit what we talk about on the program. Hopefully, if you've been seeing the TikTok and the Instagram and the YouTube, you sort of already have an idea of what this podcast is beginning to look like and the direction that we are going to be taking. That also means we're going to change the way that we run our long form podcast content. Every single Friday, I'm going to be taking in viewer questions, picking and choosing the ones that I think stand out, and I'm going to address them every Friday in a video. Hopefully, by doing this, I can actually talk about things that matter to the viewers. We can learn together, and maybe it prompts more feedback from the viewers to let me know that, hey, Alex, what you said, I don't completely agree with, or whatever it might be. I'm looking forward to it. I think this is going to be way more engaging. Let's get right to today's episode. I've got my notes here and a couple questions from this week. So question number 1 says, I don't understand the thinking behind cutting ACA subsidies. Why would Trump do that? Can you share your thoughts on what you think this means? So let's put the problem into context a little bit. ACA stands for Affordable Care Act, like I've talked about on the TikTok. I'm going to get the exact verbiage wrong here, but there's something called an individual marketplace where if you don't have health insurance through your employer, you're able to go to this individual marketplace and purchase health insurance. It's tiered. I don't know exactly how the tiers work, but it's tiered and different providers provide insurance through that marketplace. Now, the ACA subsidies, the Affordable Care Act subsidies, subsidize that individual healthcare marketplace. Sorry, I should say not individual healthcare marketplace, but individual healthcare insurance marketplace. The ACA basically subsidized that market. And the extension of these subsidies may get vetoed by Trump. So what do I think about all of this? Personally, I live in Canada. I don't live in the US. We have a vastly different healthcare and insurance system up here. But I will say one thing, and it's something I'm going to tie this answer into what I've seen in the market over the last few weeks. In the US, you have a midterm election coming up. If I'm Trump or if I'm part of his administration, and I'm thinking about how do I win the hearts of voters, given the climate that the US is in right now, given where affordability on homes is, on groceries, ordinary goods, the last thing that I think consumers want to see in the US is their insurance premiums start to skyrocket because an extension on insurance subsidies was not granted. So given this has been talked about a little bit this week, if you look at Humana, you look at Centene, the tickers on those are HUM and CNC. Choppy trading, obviously, with that headline. If the ACA subsidies are not extended, you'll naturally see some people drop off of paying their health insurance premiums. They'll just kill the coverage altogether. And that obviously does not bode well for these two stocks. But like I said, if we're keeping with the theme on trying to make things affordable for consumers and doing everything within the administration's power to help, I think it would be a really bad move for them not to extend ACA subsidies. So that's what I think on the matter. Hopefully we get a verdict on the whole situation pretty soon. I think that'll be interesting to see play out. Keep an eye on those stocks. Okay, question number 2. I'm sorry to hear you did not buy oil when you said you wanted to at 57 on January 2nd. I love that we're going back to this. Can you talk about why you came to that idea? And do you see oil going higher still? All right, let me answer the second part of that question. Do I see oil going higher still? For sure. I've always, since I started trading, viewed oil as sort of, not always, but sort of a proxy for geopolitical risk in the world. Now, I know there's going to be a lot of people who trade oil and gas and come on this podcast and say, that's not the only reason that they trade. There's also supply and demand dynamics. Obviously, OPEC's a huge player. There's a lot of things that contribute to the prices of oil and gas. I'm not negating any of that. I'm just saying when there is increased or heightened tensions in the world, it does seem to be a theme that oil moves higher. And when things seem to relax or there's headlines of de-escalatory measures, oil prices start to come down a little bit. Now, I was talking on January 2nd about how there were various things in the world that started to cook. There was a lot of negative talk around Venezuela. There was already talk about Greenland. There's been talk about Iran. And if you just look at the chart on crude, 55 to 57 is sort of a multi-year low. I just felt for the longer mid to long-term play that this sort of felt like the right long. In addition to that, in early January, there was a couple of negative headlines that actually hurt oil prices for a single day, and the futures rallied right back to that 57, 58 level, and we're trading there really nicely. It seemed to react really well to bad news. And when you see that in any sort of asset, it's interesting and you should pay attention. So I can't sit here and say I had some spectacular idea to go long oil. I happened to be right on something that was sort of a hunch. Probably not going to happen again. We'll see. But that was sort of the thinking there. So let's go on to question number 3. I have been buying software stocks for so long and eating bleep. Is there any chance they go up this year? What are your thoughts? So I think before we even talk about software, you need to understand what you're talking about when you refer to software. There are a couple of different buckets, each of which is going to react differently this upcoming year. What I think. You have your cybersecurity names, you have enterprise SaaS, SaaS, which also stands for software as a service. And then you have this other bucket. I'm not sure exactly what you would call it, maybe consumer facing SaaS, but software as a service where the end user is more of a consumer like you and I and not a giant corporation. So obviously everyone knows this. It's no news to anybody. Software was a clear laggard in 2025. While all the AI stocks ripped, it seemed to be that the theme all of 2025 was AI is going to destroy software, that AI can rewrite code on its own and software is going to be obsolete because all of these companies can now purchase large language models to write their own code, and we no longer have to purchase these, multi-year plans or contracts with different software vendors. That turned out not to be the case. Software is still highly specialized. A lot of the things that they provide, AI just can't do yet. Maybe one day in the future they will be able to, but today is not that day. And so I think software got a lot of unwarranted hate in 2025. I think there's a few stocks that could re-rate higher that are genuinely high quality stocks. I'm talking about Palo Alto Networks, MongoDB, Datadog, Fortinet is another good one. These are obviously cybersecurity names, and they're a tad bit more insulated from the, I guess, impending takeover from AI. If anything, I think cybersecurity is positioned well for the AI renaissance, if you want to call it that, because AI technology has enabled scammers, hackers, and so many nefarious players in the software space to do a lot of damage to the common people and to large businesses. So to answer your question, do I think software is going to have its year in 2026? I can't say for sure. Yes, did they have an awful year in 2025? Will some of that money rotate out of AI into software? Maybe some pockets of it. I can't sit here and say that Adobe, for example, is a great stock purchase. I think personally that's a dead business, given what I've seen AI do on the more artistic side. That part of AI I think is interesting, but some of these cybersecurity names I think still have a lot of room, a lot of legs. Let's move on to question number 4. What is your opinion on this strength in staples stocks to start 2026? Is this a sustainable trend? Well, there's obviously no way to know for sure, but given what I've seen right out of the gate, if you look at the QQQ and you look at the XLP, this is the NASDAQ versus the staples. Obviously, the XLP has just massively outperformed to start out January. And I can't remember where I read it, but the opening days of January are a great predictor of success for the rest of the year. So given what we've seen in staples, given what we know about the consumer in the US, people are steadily but surely, especially middle income America and low income America, struggling. Prices are sticky. The job market looks bleak. There's tons of money being thrown at those stocks. So there are big bets being made. The US economy might get really bad really soon. I personally think if so much of GDP growth in 2025 was a function of data center spending, if we come into 2026 and we can't solve some of the issues with AI, the number one issue, in my opinion, being the electricity constraint, if we have to hold building data centers, we have to say pause until we figure out ways to generate more electricity. Either the hyperscalers have to do it in-house or the government's got to fund it and it's got to come from the grid. I don't know what the solution there is. But if we have to pause spending on data centers because hyperscalers can't afford to have them sit there idle, that is a large chunk of GDP growth that goes poof out of the window. Now, what happens to stocks when that happens? Begs the question. And where do you want to be hiding if that happens? I'd probably hide in the staples or some other areas of the market that are defensible in a recession. I think those are really interesting ideas and themes. Again, none of this is investment advice. It's just my silly brain thinking aloud. Let's move on to the final question. Trump's rhetoric is so tiring every day. It makes trading so hard. What is your thinking with all of this? How do you pick your spots to trade, if at all? All right. I'm going to tell you something that a wise trader once told me. Trading headlines is a loser's game. Don't get me wrong. You could 1000% get lucky the first 10 times you do it. Some news comes out, a stock is up 20%, or a group of stocks is up 20%. You buy it and it continues to go another 30, 40, 50% in the following days. Does that happen? Of course it does. But in the long run, that is absolutely not a viable strategy. If you want to know what I do, news comes out, let's say T plus zero today. I watch the stock all day. How does it react to that news? Did it genuinely impact the stock? I.e., if it was great news, did the stock stay well bid all day? And did it close well? Or did the stock shake off the news? I.e., it was good news. We had this gap rip on the open and then it fades all day and close kind of crappy. Did the stock shake the news off? And then the next day, I'm reading the research. You have a bunch of research coming from a bunch of different firms. What are the firms saying? How is the stock trading in the pre-open? You have to give yourself that time to understand, what does the stock and the people trading that stock think about this news? What does it truly mean for the stock? Trading it on the first day, you really have no idea. You're playing a guessing game. You have no edge. And it's a lot better to just take a day, be patient, digest the news, and let the stock, more importantly, digest the news and create a game plan for the next day. Because if it's truly good news and it's truly a great idea, the trade 8 out of 10 times will still be there the following day. And if it's not, you missed it and you'll get the next one. But that's how it works. That's trading. Love it or hate it, that's the way the game goes. So that's the 5 questions for today. I hope I answered them semi adequately. I don't know that I have. I'm really looking forward to next week when we get some more questions. This was a great start. These were some great ones from this week. So anywho, I'm done hearing myself talk. I hope you guys all have a fantastic Friday. Take care, and I'll catch you on the next one. The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast.